Hey everyone, hopefully you're having a good day. My name's Andy. My channel's Finding Value. We're going to go over some Twitter information. We'll also bounce back and forth with some charts, give you a little bit of my opinion intermixed with the information that you're getting from Twitter. If you want to follow me on Twitter, you can do that. It's at finding_finance. That's where I'm at. And I do tweets. I also retweet things. So there's a lot of really good information that I find on Twitter. And hopefully the majority of that information is accurate. So looking at this, there was one thing I wanted to talk about. Here it says, energy insiders buying the dip even more heavily than before. So what this is the global insider activity for energy versus FTSE All-Around Energy Index. The red is the insider buy sells, and the FTSE All-Around Energy Index is the black line. On the right-hand side here, we are seeing record levels of insider buys happening right now. Not sells, buys, which is crazy to think of. And that's what we're seeing for energy insiders buying the dip. Now, when I look at crude, I do see that we're breaking out to the downside at this second. We could see a further pullback in crude and even natural gas. Natural gas has been crazy volatile. So we're seeing some sell-off here in oil. I do think it will bottom sometime when the SPR, Strategic Petroleum Reserve, releases. When they're done, I do think that we're going to get a rally out of this thing. That's late 2022. Between now and October of 2022, we could see a pullback like we're seeing in crude oil. Does that cause me concern? It doesn't, because we know that the fundamentals are still strong in oil, and that worldwide we are going to struggle to meet worldwide oil demand. Now, natural gas, this thing has been all out volatile these past few trading sessions. We threw a bullish engulfing a couple of days ago. Then we threw a large down candlestick, and today we're throwing a massive bullish engulfing again if it were to end at somewhere above this closing price of yesterday's price. I'm still doing this at 1 o'clock p.m. Mountain Standard Time. There's still an hour of trading session left. But it's been ultra volatile, going up and down all around in all of these things. Now, I just try to hold on to this stuff. I'm not trying to time and exit my positions on the short term. I'm playing the big picture, big long game, and everything from the long-term perspective is still intact for the bull market to happen. At least that from the data that I view. Looking at this, we've got some funky looking stuff going on with yields and the bond market. What I wrote here was, still looks bearish to me for bonds. A retest move to the trend line breakdown line, and then lower with higher inflation. What do you think? And what we have here is an uptrend line. That's that bottom line here. We've broken to the downside of it. A lot of the times they do a return move or a retest move to that breakout, and then it'll break again to the downside. When you look and you think about inflation, the way they calculate a lot of this stuff is they calculate it using current data, and then they look year over year backwards. We're still going to print, I think, probably for the rest of this year, higher inflation numbers, just based off of how it's calculated. We are slowing down month over month. Obviously, oil or gasoline has pulled back here recently. That's pretty obvious. We can see that in how much we pay for gas. But is this a retest move where we head lower eventually? When the SPR runs, when they stop releasing oil from the SPR, are we going to pull lower? That's the questions that we should be asking. And I don't know if anyone has that answer for sure, but I would think after they stop releasing these Strategic Petroleum Reserve releases that oil will probably head higher. And that's towards the end of 2022. So if you look at this bond chart at the end of 2022, that would set us up for another move lower. It makes sense, and we can see it in the charts. Scrolling down here, here's a ratio chart showing uranium price versus gold. We have a blue breakout plus backtest, and once that blue backtest is done, it will most probably move up the right side of the green round bottom arc. Means that uranium will outperform gold going forward. And this is what I mean by stacking up some evidence or looking at the charts. A lot of these charts really haven't had their run yet. So even if even if we have a recession and we were to pull back, I still think that all the charts in terms of commodities versus any other asset are still very low on their ratio perspective. It means that they're cheap. That the bull run, we can't have a bull run if we can't have an end to the bull run if the bull run never happened. That's what I was trying to say. The bull run hasn't necessarily happened yet. And that's why all these charts, they're basically setting up in a bull formation. A lot of them. SPUT versus gold is obviously forming a bull formation where we're going to go a lot higher. What that means is uranium's going to go higher. If uranium goes higher, usually oil, natural gas, and all those other ones go higher. We haven't fixed any of the problems in natural gas. We haven't fixed any of the problems in oil. So what makes us think that this bull market is necessarily complete? I don't think it is, because nothing's been fixed. Bull markets end with inventories flush with whatever that inventory is. We're not flush with inventories. We're drawing down inventories, and we're using emergency measures to basically contain the price. Here's gold futures breaking out on the daily. That's August 1st. That's a short term. I think they're down today. So hopefully that's still relevant. Riots have broken out in South Africa over high electricity prices and high costs of living. South Africa is where a whole bunch of platinum group metals are mined. I would think that this is, well, it's not positive by any means. It's obviously very negative, but it's positive for the price of platinum, palladium, and rhodium to go higher. Platinum is, of any metal, the majority of platinum comes from South Africa. And if they have high electricity prices and riots and all this stuff, it may impact production in South Africa. Here's Uselink, URA. It says August, September will be critical for URA and the shorter time price action. So if we look at the chart, he's got basically a move higher here back into this accumulation cylinder. We've got a nice kind of downtrend line that's using as support. We're coming back up. It says we are now back into the Livermore accumulation cylinder and above the COVID low green support. We have to hold these two now. It is very important that URA to get above this red resistance line, a previous high, as fast as possible. Yeah, and that would be nice if we could break that. Josh Young, second quarter jet fuel demand rose by 60% from the previous quarter. Now that's some good demand growth. That doesn't seem to me like a recessionary type number. It just doesn't seem like it. I don't see. I had a whole bunch of real estate. We've got a whole bunch of homes that went for sale in my block. They all kind of came up at the same time, but they're selling all of them. The majority of them have been sold. They haven't been staying on the market for that long. I would say they've been staying on the market for a little longer, but they're all being sold far less than 2 months. So probably within weeks or a month of being put up, depending on what home it is and the asking price that they've got. Some of the homes have gone for very high figures, very high figures. So it just doesn't seem like a recession to me. A recession doesn't have home prices selling in less than a few months or two. So I still going to go with the gut here with the data that I see and with what I'm seeing around me is that we're not necessarily in this blowout, recessionary crash type deal. Here's Encore Energy. You can't tell me this doesn't look good. It does look good, guys. This is Encore. It's breaking out of its downtrend line to the upside. Looks fantastic. It could very well come back and do a return move and do a retest on that breakout of the trend line. Uranium spot price, one to watch. You can see that we've got some resistance line. We're basically squeezing up. We're right at the resistance line. Are we going to break higher here for uranium? That is something to watch. This is Cpi Energy. Two big, nice candlesticks here rolling higher. This is one of the companies that I talk about in my website. We were buying it kind of in this whole vicinity as it was coming down, waiting for a big break. I do think that Cpi is a solid company. Good rare earths, high percentage concentration of rare earths that they have there. I think it will eventually go into production. Whether they do it or someone else, I don't know. But they've got good assets. It says, I love silver, but you need to look at uranium. Uranium in relationship to silver, actually uranium against any, I would say any other asset is about to outperform. So uranium, to me, looks like it's going to outperform at some point in the future. Do I know when exactly that point in the future is? I do not know. And if anyone tells you they know, they either know insider information like perhaps they work for the government and they're going to release some sort of bill or something that they know. But anybody who's outside of it, what we do is we look at charts. We look at the footprint that people have put in the sand, so to speak. And what we're doing is we're looking at the sand and we're looking at how much force they're applying to the sand down here. The big, large up days or movements means that they've got more force being applied in that footprint. We can see that they dug down into the sand deeper, that the buyers are about to push this thing higher. We're right at that resistance area. We've dug our foot into the ground with a pretty good amount of force. Now we're waiting for that force and that momentum to transfer through and carry us forward, upward. So everything looks prime when you look at uranium versus any other asset. We're just waiting. Now, we've got fear in the market. There's all these other things that are going on. We've got lots of volatility. And that's something that you just have to ride through and learn. And you need to learn how to deal with that volatility. Stick with the fundamentals. Stick with the technicals. Have both of them. Look at both of them. Gain as much information as you can as an investor. And remember, the cyclical stocks, you're going to have some exit point at some point. I can help you with all this stuff if you guys want. Description link below. The Platinum membership on the website if you guys need help. Now, here's Cpi. He was looking at that same thing. It says, wonder what energy insiders know that every high frequency with a depression macro view doesn't know yet. Everyone's looking and saying that there's going to be this gigantic recession. Fear, 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 fear. I see it all over the place. The majority, I think, at least on a lot of these areas, are I would say much more bearish than what I am. I'm more bullish, and I think that energy has a problem that needs to be solved. So that's where I'm at in that type of scenario there. It says oil market, U.S. released 4.6 million barrels from the SPR last week, 660,000 barrels per day, the smallest weekly release since late April. All the barrels released were sour, but this is the sour and sweet U.S. Strategic Petroleum Reserve in millions of barrels. You can see the sour is just dropping like a rock. So we are releasing that oil out of the strategic reserves. We're releasing a little bit of sweet crude, not as much as sour. And that's the releases there. It says the average 30-year fixed rate mortgage rate slips to 5.05%. Back in early June, it was 6.25, a 1.25% difference. That's going to help real estate. It's really going to help. The mortgage rates here have been awfully volatile. We have seen some huge moves. And when you look at the 10-year yield, this is really the charts here are getting thrown all over the place. We had a massive move in 10-year yields here just recently with a little bloody nose, bloody forehead, whatever you want to call that. But the volatility across this, I mean, this is what prices assets. And we have moved from 3.5% roughly all the way to 2.5% in like 2 months time frame. A little bit less than 2 months of a time frame. Massive moves coming out of yields here. And it's playing with a lot of things in the market. We also have the TLT. We can look at that real quick. This is TLT, and you can see some huge volatility there. But I think this is going to come up and kiss this line perhaps, and then eventually work its way back over. But looking at the most recent trading data, we had a nice big up day here. We had a bearish engulfing, and now we're getting answered by a bullish piercing. The buyers and sellers are just wrecking each other here. I don't know if it's like strategic warfare that China's dumping treasury bonds and then we're coming in and buying this stuff. I don't know what the heck's happening here, but it's two large entities dueling it out, buying and selling in the bond market, causing a lot of volatility. The DXY did break to the downside. Looking at the DXY here today, we were up a little bit. Again, this is like, I still think that we're heading lower here over time. Do we come up and do a double top? You know, it doesn't matter to me where this thing goes. I'm not really playing the DXY, but I do think it's possible to go and do a double top. It could even just roll over right from where it's at. Difficult to say on the short-term stuff, but I do think it will roll over at some point, just like every other commodity bull market. This is the quote of the day by Don Durrett. It says, "I found throughout my long investment career that an investor needs to make very few investment decisions in their lifetime." I think I read this once before. I'll read it again. The key is to identify a long-term trend as it begins to emerge. Invest in that trend. Ride it until it ends and another trend replaces it. As an example, US stocks in the 50s and 60s, commodities in the 70s, Japanese stocks in the 80s, tech stocks in the 90s, commodities in the 2000s, and tech and paper assets in the 2010s. The next trend that is emerging will favor things or hard assets. I completely agree with that. This is what the gold market are telegraphing now. The trend will be inflationary driven by resource shortages and a tsunami of money printing. That's basically exactly how I'm positioned. We can also see that trend using other metrics. And that's what I do. We can see it using technical analysis. We can see it using other metrics like CRB to S&P 500. If you take a big picture view, the downtrend line's broken. This is probably wave one of a big three-way move. But the trend's broken, and it's a new paradigm where commodities will outperform. I just so happen to notice this very early down in this area here, based off of the ratios being so cheap, and based off of the real estate market in the expansion phase is another way that I identified the early onset of a commodity bull market and how I got in early. We can also see that in other metrics. One of those metrics is the PPI to CPI ratio. And if you take a big long-term view, whenever this ratio is going up, this was 2001 all the way to 2008. That's the ratio, and we had some pullbacks in it. But that's that ratio in that big bull market back then. We have another bull market that happened in 49 to 51. Then we had a sideways motion all the way through till 1970, all the way up till 81, 80. Then we had a big disinflationary period. So what I'm trying to do is I'm trying to stack all of this data like a puzzle. And as this data stacks together, this to me is showing me that we have an inflationary period and we're in the middle of one. We're in the middle of one. And I think we could break out of this period here and go far higher. Why? Because I do think that the CPI is lagging quite dramatically from the PPI, but I do think that we're going to have problems in resources in this next decade. And I agree with the quote before. It's dead nuts on. We can also see, if you were to choose something like oil, that they all basically, in fact, I'll just put it on this chart here. So we'll do CL1. And if you were to look and I were to zoom in, let me do this. I'm gonna put it in another pane. So we'll do a new pane here. And if you look, you can see that basically the PPI to CPI ratio is the oil price. We are slowing down some where this ratio could come back a little bit over time. And I think after we lose those the strategic petroleum reserve, after that is basically done leaking oil out of it, I think that we're going to see this move all higher again. So I think everything's intact, and I think all the problems are still in place. Nothing's been solved. Inventories haven't been basically replaced. And that's kind of why I'm remaining long. I don't think there's going to be a blowout crash from real estate either. Home starts aren't basically diving down below their average yet. We don't have copious amounts of inventory yet at 10 or 12 months or something on the lines of that. So I still think there's time left in this bull market. And with interest rates going all over the place, who knows what the inventories will do in the short term. We went from 4% to 6.25%, back to 5%. It's going all over the place. What ramifications is that going to have on the real estate market? I don't know. We're going to have to find out and look at the data. But right now, I'm just comfortably sitting in this stuff. We're seeing lots of volatility. We could see further downside in oil in the short term. We're definitely playing around with that breakout. Now, remember, a lot of these guys, what they do is they force it down. They'll get everybody to basically go short oil here, and then they're going to reverse it and head it back higher. So it's called a slingshot maneuver, where they get everybody faked out. They purposely break it down, and maybe they reverse it higher, maybe they don't. I don't play the short term because of those very reasons. If we do get a larger pullback, I'd be a buyer myself. If you guys need help navigating all this, the description link below, the Platinum membership, you can sign up. We do question and answer sessions on the weekends. This weekend, we're going to have it Saturday at 7 a.m. That's going to be the session that we're going to have this next one. I've had it on Sunday in the afternoons the past couple, so I'm going to kind of switch it up, and that's what we're seeing at this time. But that's all I've got for today, guys. Give me a thumb up for the content, subscribe to the channel, and we'll catch you next time. This is Finding Value.